and welcome to the Fundamental Value podcast, hosted by Joshua Frank, co-founder and CEO of the TIE. On Fundamental Value, we speak with leading analysts, traditional finance and digital asset firms, and investigate how leading minds in the cryptocurrency space research, analyze, and quantify the value of digital assets. Quick disclaimer, this podcast was recorded and is being made available solely for informational purposes.
Today, I'm excited to be joined by David Micley, Business Development Director at Wintermute. David, it's great to have you on.
Josh, it is a pleasure and honor to be here.
So let's start at the beginning. We're gonna riff a little bit throughout this episode. David and I are good friends, and have become good friends over his first few years at crypto. So hopefully this will be a fun episode. We'll riff a little bit, but why don't we start? Walk us through the life of David Micley. Let's skip birth. Let's skip the first few years and go into starting your career as a mensch, and then how you kind of went from the world of Jewish philanthropy into MIT into Bridgewater. So give us that story. How did this happen?
Yeah, sure. And it takes a mensch to know a mensch. So, I am half the mensch that you are, Josh, but honored to be called a mensch by a mensch. So, yeah, I started my career as a professional in the Jewish community. My first job was recruiting seventh graders to go to Hebrew school on Sundays. And that was actually my first sales job. First time I ever did any sales. And it was the hardest sell I've ever done. Convincing a 14-year-old to spend their Sunday mornings at Hebrew school, very, very hard. I had a tactic. I had a strategy. I would take the kids out for ice cream, let them order whatever they want, and then would tell them about Hebrew school. And that was my secret sales strategy, which, works on adults for trading crypto also. So when in doubt, use ice cream. But yeah, had a few jobs after that. Worked as a fundraiser, lived in Tel Aviv for a few years, working with startups and students, and then eventually made my way to business school at MIT, studied finance, went to Bridgewater. That was an interesting experience, was there for a bit, and then found my way to Floating Point Group, a crypto startup founded by MIT undergrads who you know very well. And that was my foray into crypto, and then joined Wintermute at the beginning of this year.
And so I guess the lesson from this story is that, everyone should start out by selling people selling kids on doing something they don't want to do, right? It's like, sell a kid on eating broccoli. If you can sell a kid on eating broccoli or going to Hebrew school, then, you can sell crypto trading to any TradFi firm in the world that isn't pro crypto yet, right? I guess that's the moral of the story. Is that what we're?
Yeah, I think that's it. Just do something that is really, really hard, and then everything else gets easier. That was it. So, since then, just been on cruise control.
So let's talk about your transition, from finance into crypto. So, obviously, Bridgewater is a very intense place, but it also wasn't the most, at least historically, hasn't been the most pro crypto firm. What drew you from, Bridgewater? It was about 2 years ago to moving into crypto, and at the time, love the FPG guys, the Floating Point Group guys, and I'm sure we'll talk about them a bit. But just like us, we were 5 or 6 people back then. You joined a very small firm coming from Bridgewater. So, how'd you make that transition? What clicked for you on both the crypto side, but also on the moving into a startup?
Yeah, I think for me, coming out of business school, I was really focused on working for a big brand, working at a place that people knew about. It's just this thing that happens when you go to an MBA. It wasn't important to me before, but once I was there, I kind of got sucked in with that mentality, and sucked away from really just doing the things I was excited about and cared about. A lot of good things about Bridgewater, but huge office, 1,500 people, takes forever to get meaningful responsibility. Very intense, competitive place, sometimes in a good way, sometimes not. And then I met the CEO of Floating Point Group, John Purfoy, who is one of the most outgoing and friendly people, I've ever met. And it was just so different, the way that he thought. And then I met his co-founders, the way that they thought, and the whole culture of the firm actually is what drew me in. When I just saw that you could go to a place that, had 10 people, really shape things, really take meaningful responsibilities, and do it in a really collaborative environment. So it was the culture more than anything else. And then I found crypto actually to have that culture across the industry through meeting you, other people like you. And then I just got lucky that I also happened to join at the beginning of a bull market. So that was fun too. So those things just kind of lined up, and it's been a really good change. And, for me, it's crypto all in at this point. Not ever really looking back to traditional finance. I have a lot of former colleagues that reach out to me and ask how they can get into crypto. And I think that's the direction we see things going. And I kind of feel lucky that I just found the right people to get in the journey earlier.
So it really was the people, not crypto itself, that brought you in initially.
Oh yeah, it was 100% the people. I mean, I had exposure to crypto even at business school. Gary Gensler was one of my professors. Meltem also went to Sloan. She came in as a guest speaker. Jeremy Allaire from Circle, he came in to talk. I mean, we had great crypto leaders coming into our classrooms all the time. And it was interesting to me, but still, I wasn't kind of pulled into the industry. So it was really the culture that brought me in. And then once I, actually started working in the space and saw all the potential for new use cases, for new trading opportunities, then sort of there was a business opportunity also that I was excited about. But the driver for me from the beginning was 100% culture.
And I think that's actually something that's really important to note, for people listening. Like, crypto has an unbelievable culture. Like, yes, there is, you see on Twitter the bro culture and this and that, but above anything else, this is a community, and it's like everyone is so helpful to each other. And like, we actually just hosted a happy hour with the Wintermute folks together. And, we have a new chief revenue officer who just joined after, 30 years in traditional finance. And after, he's like, my one key takeaway is that people here are just so nice and friendly and collaborative and want to work together. And it's really such a cool thing. Like, you actually, genuinely feel good every time you go to an event or a happy hour, right? You don't feel like people are fishing you for information or anything like that, which I think is so awesome. But so David, on that note, so how did you go from, liking the culture to crypto lover? I mean, like, because now you're so passionate about crypto. Did that transition happen naturally? Did it happen fast? Did it take time? At first, were you like, what is this, fake internet money thing? Or like, how did that happen?
Yeah. And, I think it happened really fast actually. So, it was 2020 when I made the switch, and we're in the pandemic. All the stimulus is going on. I was at Bridgewater before that, a macro shop that was very bullish on gold as sort of a inflation play, as a way to sort of, kind of play the stimulus that the government was putting into the economy. And gold was doing okay. It wasn't performing that great. It was, not as good as expected. And then I started hearing about Bitcoin, like, when I joined Floating Point Group, and started reading about these institutions that were getting into Bitcoin, and, really established firms. Like, obviously there's, MicroStrategy, and they're sort of an outlier. But I think for me, it was really when I heard about Mass Mutual investing some of their balance sheet in Bitcoin, right? A 100 plus year old Massachusetts, insurance company. That's as,
and I think it must have been
as you
close
can
to the
imagine.
time that Tudor was. It must have been close to the time that Tudor was getting involved as well, and like Paul Tudor Jones, came out, right? So it was that
Yep,
same kind of
exactly.
momentum. Yeah.
Yep, it was that same time. It was fall of 2020, and I, my first week in crypto, working full time, Bitcoin went from like 15,000 to 19,000, and I pretty aggressively sold all my gold, bought Bitcoin with all of it, and I basically was just investing in gold. Like, I wasn't even touching stocks. I was just a gold bull. So I switched really fast. And then what happens? You sort of go out the risk curve. You buy some Bitcoin, then you buy some ETH, and then you buy some Solana, and then you're buying all sorts of coins that I don't even remember their names anymore. So, and those
I
latter ones
definitely
probably
gave
did worse.
David some, I wouldn't call them investment recommendations. And by the way, nothing we say here is investment advice, just to clarify. But I definitely suggested, David and I used to riff every single week. We used to, chat every week, and, shared some questionable assets where, some of them have done very well. Others, the story with crypto, right? Anyone listening, right? Others have gone, to zero.
Yeah. I gotta say that if I had, the diamond hands that you had, Josh, I'd be in a better shape. But I was not always as patient as I should have been. Did a lot more trading than I should have been doing. And yeah, I mean, I still did okay. Still glad I got into the space, but the bull market gets you, excited about things that maybe you shouldn't be excited about sometimes.
Well, the whole
But
thing
that
is
was a good learning experience.
when you start this transition of going from like, I think this is a good investment or trading opportunity to, if this just doubles one more time, I can buy a yacht. That's when you know you need to be
Yes.
selling. And don't worry, I also got to that point in like late last year. I remember when I was at DOS London, this conference, Digital Asset Summit in London, which must have been around November of last year. I was like, if we just double one more time then, and that's the top, it's never going to happen. So
Yeah, exactly. Because every time you double, you just want to double once more because
yeah.
every double after the first double is just so much more doubling. So it really adds up. And a bull market can be really exciting, but also really distracting. But yeah, I did all sorts of crazy things, staking for unrealistic yields and just really, I kind of really aped into the space, full force.
And
Um,
that's the best
but
way to get into the space, right? Like for anyone listening who's not yet gotten and created a MetaMask wallet and interacted with DeFi. I think that's the thing that I suggested to you actually when you were first getting into space. I was like, download a MetaMask wallet, start interacting, lose some money, because without losing money,
yep,
you never, you really don't understand how these things work. And once you lose money, you realize, you start to understand the mechanics of all of this, and it really all starts to make a lot more sense.
100%, 100%. The actual pain of losing money definitely helps as part of the education process, right? That's going back to Bridgewater days. Ray Dalio had a quote. He said, "Pain plus reflection equals progress." So you have some pain, you reflect on it, then you get better, learn how to deal with things better. And yeah, and for me, at this point, definitely much less of a trader. I don't try to be a trader at all, actually. I find that, just having a long-term thesis is a much better way to go and much, kind of frees up mental space to focus on other things. But I went through that journey and kind of explored all different parts of the ecosystem. Now I invest, I hold, and I work in the space, which, is great.
Yeah, and look, I mean, the same thing goes with me, right? Like, we have, obviously the TIE is become the leading provider of data to institutions in crypto, and everyone's like, "Oh my God, you have all this data. Why aren't you trading using it?" And I'm like, just because I have information doesn't mean I know how to trade. Those are very different, very different skill sets, and so I'd much rather be a service provider than a day trader. So, um, but kind of on this
100%.
note of, oh yeah, go
100%.
for it, go for it.
Yeah, no, 100%. It's a different skill set, right? And I think that just, yeah, the retail train that took off in the pandemic was just, you know, everyone's doing technical analysis 101, reading the charts, reading the horoscopes, reading the charts with the horoscopes. I mean, there's so many things that I did. And now I realize, okay, what are my limitations? Like the original thesis that I had about Bitcoin, that held. And that was actually, I was very aggressive with that. And, I think it's important to kind of come back to having a real clear motivation for why you're doing something. And if it's, grounded in some, real facts or long-term views that have logic behind them, you just have a better chance for success. And then kind of worrying on all the day-to-day stuff. I mean, there's people that are good at that, but yeah, obviously not me.
Yeah, and so transitioning from all right, so to Ray Dalio's quote, right? You made some mistakes, you lost a lot of money, and then you ended up at Wintermute. So and now kind of ready to kind of hit the ground running. You've been here for a while, right? I think you've been in your role for over half a year at this point. It's pretty crazy. But can you kind of speak about why you
Yeah.
made that transition to Wintermute? Obviously, I think you still love and have a tremendous amount of respect for the FPG guys. So curious as to why you made that change, and then speak to us a little bit about Wintermute. What does Wintermute do, and what got you so excited about the firm?
Yeah, absolutely. Um, I think actually my first podcast that I heard in crypto was of you interviewing John Perfoy, the CEO of FPG. So, kind of crazy that I'm here. I made it to the podcast. But Wintermute, yeah. So what drove me really to join Wintermute was, I always heard about Wintermute as one of the world's best crypto market makers with an expertise in DeFi, with sort of this unique team that had experienced executives and traders from traditional finance, from Optiver, and a deep bench of DeFi talent, of DeFi developers. and a team that was really, focused on the DeFi ecosystem. So to me, being at a market maker in Wintermute in particular was a chance to get exposure to the market making business, in a sense of partnering with projects on liquidity and working with more crypto native firms. And also get exposed to sort of the venture side of the ecosystem. Wintermute does a lot of investing. So I was, interested in that. And this was, we also do OTC. So that kind of was a way to both service, all the traditional finance networks that I knew from my time at Bridgewater through our OTC line, and then also get deeper into the crypto rabbit hole through our market making projects and venture line. And I happened to know someone that worked at Wintermute, saw him at all the conferences, Jonathan, and always liked him, always heard good things about Wintermute. And so, once the opportunity was there, it was just a great chance to really just go deeper down the rabbit hole. So I kind of got my baseline of education from FPG and got to go deeper in through Wintermute.
So I actually, on my last episode, I believe it was the last one, I brought on Jonah Van Borg, who's the head of trading at Cumberland. And so, we've had a large number of other liquidity providers in the space on the podcast. What differentiates Wintermute? What makes Wintermute, different, but also better than some of the others that we've had on?
Yeah, I think a few things. So first, a lot of respect for the other market makers that are just out there. I think we have a few sort of advantages. One is, being in the space since 2017 and being fully focused on crypto. That gives us some edge in terms of the infrastructure that we built out, our trading capabilities. So I guess you'd have to talk about it, one business line at a time. But on the OTC side, our real edge, I think, comes in trading large scale of the altcoins, right? So kind of BTC and ETH, very competitive space. Some of those trades will win, some of those trades will lose. When a counterparty is asking for a quote, sometimes they'll go with us, sometimes they won't. But when you start to go down sort of the less liquid coins, we trade 250 tokens and we can do them at scale. And at scale means, minimum clip size of $100,000, but we can do clips in the hundreds of millions of dollars. So we have the infrastructure built out to take on huge amounts of risk, to give really competitive pricing. We're trading across all the major exchanges, and we're also trading on DeFi. So on the major exchanges, we're either the top or in the top few in terms of market share, right? So 10 to 30% of, many exchanges volume is Wintermute. So there's only sort of a handful of market makers of OTC desks that have that kind of reach. And again, given that we market make for so many top projects, gives us the ability to also effectively OTC those same tokens at scale. So that I think is probably, kind of just to sum it up, it's really our altcoin coverage, our DeFi expertise, and having a team that has both traditional finance experience as well as DeFi developers under the same roof.
And so I'm actually really excited to dive into liquidity, which we'll do in a second. But you mentioned one thing, which is market making for token projects. That's a pretty novel idea to somebody who's not from crypto. Can you kind of speak about what that is and what that means, like what that business line is?
Mm-hmm. Yeah, and it's raining a little bit. Is the sound okay, or can you hear?
You're good. You're good, David.
Okay, awesome. So I live in New England where the weather's always terrible. So yeah, market making for projects is essentially, when a project has a token and they're getting ready to get listed on a centralized exchange or multiple centralized exchanges, they often hire a market maker to ensure that there's a strong order book, that there's good liquidity so that investors and traders can easily move in and out of positions. So we essentially act as the market maker. We're not taking a position. We're not, long or short. We are just putting orders and trading on both sides of the book so that other market participants can easily trade in and out of whatever positions they want to trade with. That's pretty important for crypto because the markets are very inefficient. Tokens are traded on many venues. Pricing can sometimes be different between one venue and another. And liquidity is often not great. Liquidity is really just the ease of which you can move in and out of positions. So market makers make it easier to move in and out of positions. And for a token, a project to do well, they have to have a lot of things going for it. They have to have, a good community, good following, good marketing, good investors. But good liquidity with a good market maker supporting that liquidity is often one of those key ingredients that helps a token survive and thrive over the long run.
And the exchanges, correct me if I'm wrong, some of them have minimum volume and liquidity requirements, right? So that they don't delist these assets.
Yeah, I mean, exchanges all have their own criteria, and projects go through a process to get listed on exchanges. Some exchanges require a project to have a market maker because exchanges are interested in volume, right? They want to have as much volume as possible. That's how they get paid. As a market maker, we can't commit to a certain volume level because volume is dependent on people, other participants trading against liquidity that a market maker like us is posting. So if a market maker does commit to a certain volume level, that should instantly raise a flag because that suggests they might be trading against themselves or maybe making a promise they can't really keep. But what the market maker can do is create that liquid environment so that the volumes then follow. And you're 100% right that for exchanges, that's volume is an important criteria, and liquidity can potentially help bring volume.
And so let's talk about liquidity now. So can you speak to the liquidity of digital asset markets? Being able to trade 250 assets that's a tremendous number of assets. I'm assuming you can't trade 250 million at $300 million, right? I mean, granted, the top 250 coins may not even be that large, right? But can you kind of speak about, how like where, obviously every asset is different, right? And different days are different, but like, I want to trade at, the 100th coin by market cap, and I want to sell $25 million worth of that coin. Will you just, obviously you're quoting a price, but you're assuming that risk and you're trading it over time. Like, how does it actually work? How much liquidity is there? How long does it take you to work these orders?
Mm-hmm. Yeah, it's a great question. So whenever we trade, we act as the full principal on the other side of the trade. So we're not a broker. We're not passing off the trade to another entity. We're taking on that full risk ourselves, which in a way is good for whoever's trading against us because then there's no additional intermediary, right? Like often there's other players in the ecosystem that they play as an intermediary and might even get the actual, original pricing and liquidity from us. And we do it through our algorithmic trading systems, right? So the fact that we're trading algorithmically across all these venues gives us the ability to sort of offset our risk in a way that doesn't impact the market because we're, on over 80 venues. There's just so many ways for us to sort of take that position and hedge out of it. And also our systems are just built to understand, how much risk we can take on, to take on big amounts of risk. But again, always hedging out of it, always getting back to that market neutral position. That's kind of critical for us. We want to be liquid and market neutral. So, looking back at, the past 4 months, we had these sort of two different but closely in timing events of, just huge drawdowns in the market, one around Luna UST, the other around Celsius and Three Arrows. And during both those periods, we did fine because we were market neutral. There's arbitrage opportunities during those moments of volatility. So those are actually great trading moments for us, but we're never caught in a position. So it's again, comes down to having really sophisticated systems that can take on risk, hedge out of it, and do it in a way that gives a competitive price.
And so a few things. First, as you mentioned, 80 trading venues, which is kind of this like crazy concept to, anyone not in crypto. Or is there really liquidity on 80 venues? Are you mostly doing that for the issuers? Or is it because they've requested that there's that there is liquidity on those different venues and price discovery, or is it the fact that you actually need all 80 venues to be able to trade these 250 assets? What's driving that? I mean, that's such a large number.
Yeah, so I'd say for there's definitely a concentration of exchanges that have the majority of the volume, right? So, there might be 80 venues, but there's a much smaller group where the more material amount of volume actually takes place, the more material amount of liquidity is actually posted. But the 80 includes both DeFi venues. So we're very active on DEXs across multiple chains, multiple ecosystems, right? And for the long tail of assets, that just helps us sort of have another source of venues to trade on. It also enables us to keep the price in line between CeFi and DeFi. When there's a token that's listed in both types of venues, we can keep that price in line by arbitraging the difference in price between those two. So yeah, 80 is a big number. It includes a lot of DeFi exchanges, a lot of DEXs, on multiple, a range of different chains. The actual number of exchanges where, majority of liquidity is posted is much less than that. But it's still really important to have sophisticated systems to be able to execute really efficiently between the ones that matter, because there still is a fragmentation of markets. Even if it's amongst 5 to 10 exchanges, that still is sort of a kind of a big operational workflow to trade on even that smaller number of venues.
So how do you guys think about risk management as it relates to DeFi, right? Obviously you guys are principal, so your guys are the ones that are taking on all the risk, but like how do you think about risk management, I guess, across everything, right? If you're gonna take my if you're gonna, quote me a price on $50 million worth of token 87 on the list, right? How do you even like think about pricing in risk? Like, can you guys even get insurance on any of this? I presume not. Like, I'm sure you've had capital in certain places that have gotten hacked. I mean, it's kind of impossible not to, just given the sheer amount of venues. So, how do you guys even start to think about risk?
Yeah, I mean, I think the sort of risk management, risk philosophy really starts from the top of our organization. So our founder and CEO, Evgeny, he was at Optiver during the 2008 financial crisis. So witnessed firsthand the things that could go wrong as a trader. And so our approach kind of goes back to that core of being market neutral and being liquid. And, as far as DeFi venues, we have, we're not just trained on DeFi, we're sort of active users and active on the governance side too. So we try to be pretty plugged into what's going on and, know what's legit and what smells fishy way before, a market implosion may happen. So for example, we have a few people on our team that are fully dedicated to DeFi research, to, being involved in governance, to looking into protocols, to, seeing what works, what makes sense, what doesn't, what teams are on top of their problems, what teams aren't. Sometimes we're investors in some of these tokens. Sometimes we're market making for them. But if we're using them, we really want to understand them. So that's a thing that we've invested in. And we're always sort of, even though our trading is high frequency, day to day, minute to minute, second to second, we're always thinking about the things that could go wrong, a few months from now and preparing for them. Because in crypto, there's so many risks, exchange getting hacked, a lender going down. I mean, yeah, we saw what happened the past 4 months. If you had your assets locked in any number of parties, you would have really lost a lot of money. So I think for us, it comes back to, we're providing liquidity, so we have to be liquid too. And we have to really know that our assets are under our control and that we can move them around as needed.
So you mentioned ventures a few different times. Can you talk a little bit about Wintermute's venture arm and what you guys invest in, what you do, kind of what your thesis is?
Yeah, absolutely. So for us, it really just happened naturally. As a market maker, we had all these great projects coming to us that were often asking for us to invest before they were ready to launch a token. They wanted us on their cap table. There's all sorts of strategic reasons why a project might want a market maker like Wintermute to be with them. So we just had all these opportunities. We started investing, and then we really we realized we needed to structure it and scale it in a more sustainable way. So we hired someone with private equity experience to join our ventures team, build out the investment process. And basically what we look for are anything really in the crypto ecosystem that we think is going to help make the ecosystem stronger. There's definitely a focus on DeFi because we're so active on DeFi and we can be helpful to DeFi projects. So we want to invest in things both that we think are going to make this ecosystem stronger and where we can actually help. So if there's a DEX, we can trade on it. If there's a lending borrowing protocol, we can borrow from it. We can give real feedback. We want to be strategic investors, right? We don't want to just invest in something because we think there's a good return, but we also want to be able to be part of the success and contribute to that success. It really kind of, I'd say there is a concentration in DeFi, but we've expanded to a lot of infrastructure plays. We don't just invest in tokens, we also invest in equity. And it's been really a great way to get to know projects at a really early stage before they're ready to list, or to sort of build a relationship with a more established project or company that, has the same mission as us, which is ultimately to advance the decentralized financial system.
And so I guess a similar and kind of related question, you talked a lot about DeFi. One of the questions that I've asked a few guests in the past is permission DeFi. What do you think about, the idea of having, permissioned private DeFi? Do you think there's any legs to it? Is Wintermute investing in it? Obviously, Wintermute will invest in permissionless DeFi and interacts with it. But do you think there's demand for it on the more, TradFi, traditional institutional side?
Oh yeah, definitely. Yeah, I think permission DeFi is, a really great way to bring in institutions not comfortable with DeFi compliance risk into the fold and into DeFi activity. So it's for sure an area that we'll look at. I think there's a
Are you
lot of
guys
different ways
interacting? I
that,
mean, I know there's very
different
little,
projects.
but are you guys market making on permission DeFi right now? Are you engaged yet or not really?
We might be using permission DeFi in sort of a borrowing capacity. So we're always looking to borrow more capital. So permission lending pools is attractive for us. We're not active. We're not lenders. We don't lend. We just borrow. So that's just something to know too, because we want to basically use all the capital we can to trade more. Um, there's kind of no need for us to lend. But yeah, we'll use permission DeFi in a way where sort of borrowing pools. That's one way. And yeah, I think, my view on sort of what I'm seeing from institutions stepping into the space, it's a really good way to get over a lot of KYC and compliance objections. So I think permission DeFi is a real important space. And I think in general, when you think about permissionless versus permissioned or decentralized versus centralized, my personal view is that the centralized entities will still have an important role even as the decentralized world grows, right? I mean, I think there's sometimes still a need to grab a phone and call someone or have a person to help on the other side. And so centralized entities can take all sorts of forms in the form of service, in the form of authentication. But I don't think everything will be decentralized. But I think a lot of what is currently centralized can be decentralized. So I don't think it's really about going to one extreme. I just think it's about moving from where we are right now to making things more efficient and more open. That's probably the two things that are most important: more efficient and more open. So people have more access to it, and just the economics are just efficient. You're not investing and spending money on things that can be done more cheaply. Those are probably the two things I think matter. And then because you're saving money, you can sort of distribute the returns or rewards to the stakeholders rather than the middlemen.
And so, what has surprised you most about crypto, if anything, just coming from traditional finance?
Yeah, I mean, I think for me, the culture really was a shock, right? I mean, in terms of how helpful people are in crypto, it's just like when you go to an event and you can just go up to anyone that works in crypto, especially if they've been in the space for a while, and just talk to them and, exchange telegrams, find a way to work together. People are just so open and receptive. That was really pleasantly surprising. How smart people are, right? I think, with all like the memes and just like funny, stupid stuff people do in crypto, I think there's like a reputation from the outside that people are just, kind of morons. But like, if you look at my work and just see all the Telegram messages and like just there's not even words, they're just pictures. Like my kid looks at it and she thinks it's like a cartoon. She doesn't think it's like I'm working. She laughs
Yeah,
because she just sees
we
like
all
memes of
interact with
cats
like
everywhere.
stickers. We all chat with
Yeah,
Telegram
we,
stickers.
we,
Like I'll be like messaging like a PhD from Oxford with Pepe stickers.
it's insane, and the amount of thought that goes into which sticker to choose, because you can see when someone's looking for a sticker. It's like you'll have these like CIOs of big crypto funds spending like 30 seconds searching for the right sticker in a chat, right? So, um, how much time people spend on that, you wouldn't. It was a surprise to realize how smart people were, also, right? Like really young, but really, really smart, and the amount that you have to constantly learn to keep up. I mean, it's just such a fast moving space and there's so many smart people in it that are very humble about how smart they are, that don't show it off because they hide behind their stickers. I think that was a pretty surprising thing.
Yeah, I mean, it's actually unbelievably crazy how fast the space moves. Like, I paused the podcast for a year, and granted, I try to ask some of the same questions, but the market has changed so much. I mean, the thing is, like, and we talk about this a lot on the podcast. Like, things are changing every week, every month. I mean, the narrative changes. Like, remember, I mean, DeFi 1.0 is kind of like when you started. Then DeFi 2.0 came. And honestly, like DeFi 2.0 feels old at this point. Like now we're waiting for DeFi 3.0. Like at this point, the market's ready to move on. And I mean, the crazy thing is like, as a VC, you guys invest in stuff. And then like 3 months later, some of that stuff already is just late. I mean, it's already just like, it's already like old technology because, this is open source code that people are just iterating on and changing and optimizing. It's really hard to be a VC when things move so fast, and you even have to deal with like a 6-month unlock on some of these investments that you're making.
Oh yeah. And by the way, DeFi 3.0, I thought I discovered it last year. I found some projects that were labeling themselves as DeFi 3.0. So turned a short-term profit on some of those. But yeah, I think that it is moving so fast. Like I'm just thinking, to the people coin where, there was the DAO that was trying to buy the US Constitution. And that was like almost a year ago. That was Thanksgiving of last year. And now you just see so many DAOs organizing in so many ways to do so much. Like I'm part of this group in Boston called Boston DAO, where we're like a, pretty wide reaching group that is engaging with members of the state Senate and, finding ways to actually do things as a DAO to make the Boston crypto scene, the crypto capital of Massachusetts, at least.
So I'm actually in one DAO, by the way. I'm in one DAO, but the only DAO I'm in, I don't even know if it's a proper DAO. It's called the Josh DAO, and we have about 50 Joshes in Telegram on a group. And every time somebody joins named Josh, everybody just writes, "Hi, Josh. Hey, Josh. Hello, Josh." So that's the only DAO that I'm personally involved with. So.
That seems pretty nice. Honestly, I'd almost want to change my name just to be part of that.
It's really,
I feel like
really
we could do
cool.
a David DAO, but
yeah, any
David
David's
DAO might be
listening, message
too
David
populous.
Micley so you guys can build a competing DAO with us.
Yeah, I think we compete. I mean, David's a pretty common name. We definitely would win on numbers. I don't know about quality people though.
We have 2 Josh Rosenthals in the Josh DAO, so we have multiple of the same full names at this point. So, we probably have a pretty unfair.
That's crazy. They can fork it and have it. Yeah, you do. Wow, props to Josh DAO.
So, you've been in crypto for a few years now, and it's very clear to the listeners. I mean, it's honestly incredible knowing you how far you've managed to come in the last 2 years from our early conversations. I mean, you now know, well, you probably knew way more than me 6 months in, but now you clearly just know so much more than I do. So, having been in this space for so long, how have you seen, you were trying to sell to institutions at Floating Point Group. Like, how have you seen that landscape changed, over the last, 2 years or so?
Yeah, I think there's definitely like an interesting rhythm to it. Where, and first of all, Josh downplays his knowledge. I will always be a student of anyone that's a member of Josh DAO, especially Josh Frank. But yeah, it is interesting to think about the past few years. So I think when I first got in, it was kind of the more sophisticated institutions that were thinking about crypto for some time, said, okay, things are lining up, like pandemic, stimulus, Bitcoin, it's a good play, let's go. And then towards the spring, summer, fall, I guess like last year, a year ago, you had people that were starting to FOMO in, right, from the institutional space. A lot of macro hedge funds weren't doing well. Stocks were doing great. So you just had a lot of reasons why people in TradFi were trying to leave their jobs and work in crypto because they saw all the 25-year-olds with Ferraris and, their bonuses were flat or down. So you saw that sort of craze happening. And then the crash, I think, scared off a lot of the sort of, people that were just jumping in for the FOMO. But what happened during that whole period from 2 years ago until now is that the really big firms, like the titans of financial services, were doing research and were putting together working groups and maybe even were running their own money, partner capital that they weren't sharing with the world, and getting ready for big plans. And those plans have not slowed down at all. And what's really interesting right now in this bear market environment is that at Wintermute, we've been as busy as ever onboarding new OTC counterparties. And I think what's driving that is that people finally have the people that were interested in onboarding finally have the time to take a step back to go through the onboarding. It doesn't take too long, but still, it's just like to onboard in the middle of a bull market seems like, you could be missing something in the next 6 hours. So now they have 2 days or, whatever, how many hours they need to send the docs to onboard. So you have that happening with a lot of funds that, their plans were still and steady. And then what you also have happening is the really big firms that just take forever to do anything are still working on what they were 2 years ago, what they were 1 year ago, and getting things ready for the next wave. And that's really what we're building for at Wintermute is the next wave. It might be in 6 months, it might be in 2 years. It doesn't really matter. We're just getting ready for it. And the biggest firms are hiring crypto teams at a pace I've never seen before. And those that were kind of, in it for the broader thesis and not just to, make money over a quarter, they're onboarding and getting ready to trade.
And, you mentioned onboarding more liquidity providers now than ever, or sorry, more counterparties. I apologize, than ever. Have you seen any skew? So one thing that we're actually finding really interesting at the TIE this month, we are signing more traditional hedge funds than crypto hedge funds, and that has never happened before. So we're actually seeing, and obviously you it's a little bit of a difference because for us it's a subscription platform, and maybe the crypto hedge funds have less money than they previously had given the state of the market, whereas more of the traditional guys, their crypto exposure was very small, and they're placing longer term bets. But I'm wondering if you're seeing a similar thing, because it's actually been shocking, how there's been this really clear switch for us in the last 60 or so days, where the crypto hedge funds are slowing down a little bit, but the large traditional hedge funds, I mean, the top 20, 50, 100 hedge funds in the world, right? They're starting to onboard, at least with us. And it's just it's really interesting. I mean, because, a couple of years ago, we'd start talking to these guys, and these deals are 3 years and 2 years in the making, right? These didn't happen overnight.
That's really interesting. Yeah, definitely. Make sure that those guys are know where the good liquidity is at too once they get going. So you can send them a link to this episode so they can listen right after. But yeah, I think we're seeing. I mean, the crypto native ecosystem has always been one that we've been pretty close with. So that has been pretty steady. I don't think it's slowed down for us. There's a lot of new funds that have launched, right? So partners at one fund will leave, start their own fund, that sort of thing. Or, someone that worked on a project, made a lot of money, then will raise capital and have a fund. So we're still seeing a decent amount of new crypto funds onboarding with us. But definitely more and more traditional finance funds. I think it's driven by a few things. One is, the phenomenon we just talked about. Another is, Wintermute, we trade spot and options. So a lot of the TradFi funds want options. They want a way to sort of get the exposure without dealing with spot directly. So, we cover options for, a long list of tokens, and definitely seeing a lot of demand for that. And yeah, I think the other piece is really just they're finally, having the time to put things together. I think it's a bandwidth question, but yeah, I definitely see more and more of them coming, and the huge players take a long time, and they're coming too.
And so kind of transitioning into, fundamentals and price movement and stuff like that. So what do you think the key drivers or determinants of price movement are in crypto?
Yeah, that's what this podcast is all about, right? The fundamental
It
dive.
is what it's all about. The podcast is all about the fact that there is no fundamentals in crypto. No, I'm just kidding. But
yeah, it's an ironic name. I love it. Yeah. Yeah. So I think, to me, it's narrative. To me, narrative drives things more than anything else. And obviously there's a lot to that. And narrative is just like a very general term, right? Like numbers sometimes tell a story, stories tell a story, news events tell a story. But I think narrative is really a big driver, right? I mean, what makes crypto so different than equities or any sort of traditional asset class is that there aren't these sort of mean reversions. There's no real like PE ratio that things need to be at in order for it to be a stable market. So, when something moves, the momentum kind of takes off. So I think narrative plays a pretty big role. And I mean, what, so much drives narrative right now, I think, is the macro conditions. I think, the kind of inflationary environment that we're in, the tightening that we're heading into, I think all of that is affecting crypto and going to for a while. It's just a matter of how much money is available in the systems, how much risk people are willing to take. I think there's, I'm personally bearish for medium to long term on risky assets, and I include crypto in that because I think inflation is worse than what the market is pricing in right now. I think rates are going to become even worse than what people might think. And those are pretty big drivers. I mean, those are forces that are really hard to fight. Maybe there's some assets that can not be as dependent on that, but the more the more volume there is, the more institutions are trading something, the more correlations you're going to see. So yeah, I think that the macro picture is not pretty for in terms of having any sort of bull movement in the short term. But again, to me, that's fine. Like, we have so much to do in terms of building out our relationships for whenever the next wave hits, that it's a long game. And, we just want to be ready whenever it is. But yeah, that's my short-term view, non-investment advice.
And so, you talked about crypto becoming more correlated with macro markets. However, as we've seen in crypto, this is a very narrative driven market, which means that there are times where certain assets outperform and other assets underperform, right? An example of that is fan tokens have, for whatever reason, been doing extraordinarily well. I don't know if they still are, but as of like last week, they were. And, in crypto, last week is like 7 years, but let's just assume they're still doing well. But as we think through coming out of this bear market, whenever it happens, if it's in 6 months, if it's in 12 months, if it's in 2 years, it doesn't matter. How do you think through the fundamentals of tokens and what is going to drive price movement? Because I unless you think every token is going to perform in the same way, every token is going to do just as well. Like, how do you think through, what are, like, you talked about not being a trader anymore and becoming, somebody who's really taking a longer term view on assets. So when to listeners trying to do this, how should they think about fundamentals and where they should invest?
Yeah, no, that's a fair question. So I think a few things. I think the first is a really hard thing to measure, but it's important to assess sort of the community and hype behind something. I think there's probably like two levels. There's one, like the product, and there's other, like the community and hype. And those are equally important, right? The community and hype is probably more important, but product technology also important. Product technology often brings good community and hype. But I think that something that has the best product, the best technology, doesn't have the community, doesn't have the hype, is not going to do well. So I'd just say, like, that's the order of priorities. And when I say community and hype, there's many ways to measure that. You want a project that's backed by good investors. You want a project that has a lot of followers, that has a lot of engagement. You want a project that developers are coming to. There's ways to do research on this. You can jump into Telegram groups. You can see who's building what. You can see what projects are being built on top of something. You can just talk to developers and see what they're seeing. So I think that's important. And then the product technology, is this thing really adding value? Is it just a copy of something else? Is it really adding value? Is it really doing something new? I think there's a lot of excitement right now around layer 2s and Ethereum, kind of the potential for those to unlock. There's excitement about some new layer 1s, whether those will be more scalable, be more efficient. And, I'm not a coder, so I actually don't really know how to validate directly whether one tech is better than another, but I could talk to experts that are and get their opinions. So I think with crypto, it's probably hard to be an expert on everything. So it's important to find friends, build relationships with people that can help you do diligence and, get the sense of whether something is legit or not. But yeah, those are probably the two key metrics I would look at. And then if you're looking at something at the project level, like actually if you know the team and it's almost like a venture investment opportunity. I mean, it's so cliche to say this, but I think having a strong team, strong founders is the most important thing. And what does it actually mean to be a strong team? I mean, a few things. First, it's, someone that's, smart, thoughtful. When you ask them questions, it's clear they've thought about those problems before. The second is, the right experience to solve the problem. And the third is that they've actually identified a real problem that they're trying to tackle. And they'll pivot, they'll change, they'll make adjustments, But I think if you find someone that's doing all those things, then that's at least some of the ingredients for success. So it's as much of an art as it is a science. But yeah, those are the things I would think about. But the community and hype, I wouldn't underestimate that. And that can also go back to a founder level. Like as someone able to rally people around them, to get people behind them, to get people to integrate, to invest, it all comes back to the same thing.
And so this is my new favorite question, I think, or it's at least temporarily my favorite question. Fast forward 24 months, how many of the tokens that are in the top 100 today by market cap will still be there, and why?
In the top, how many? Top 100?
So take the top 100, right, by market cap today. If we looked at that same list in 24 months, how many of the top 100 that are there today will be there 24 months from now?
Yeah, it's a great question. I guess we have to do a podcast exactly, 24 months from now to test. I'd say under 50. Yeah, I'd say under 50. I think there's going to be a lot of turnover. And I think that's the nature of the space. There's all these rotations. People want the next exciting thing. So for a project to last through multiple cycles takes a lot of endurance. So I'd say under 50.
And so, to the venture investing question again, there's obviously a lot of speculation, right? And we've talked a lot about speculation and community and hype and, those kinds of things. But what about real world use cases? Does crypto have any real world value, or is it just speculation?
Yeah, that's a really good question. We didn't talk about any of that actually. So I think there's so much opportunity in that space and none of it's really been cracked. I mean, you see some things, working around data, working around networks. But I think that is really just the tip of the iceberg. To me, real world use cases are probably going to need to come through a B2B model to start, right? Like I think direct to consumer right now is really hard to get, everyday users to adopt crypto. Especially in this environment with the sort of skepticism that people have given, what's happened over the past 4 months. So yeah, when you think about the long-term promise of crypto, which, is really the long-term promise of blockchain technology, it's to solve all these problems in, a more efficient way that's open. So I think that so little has been done on that. And that's probably a space that, there's a lot of interesting projects that I actually even see, around film, around art, around all sorts of stuff. But to actually gain traction is really, really hard. So I think it's going to happen. Do you have a thesis
on the first thing that's going to gain traction?
I think it will be something really boring, like supply chains, like I don't think it's going to be something fun and retail facing. I think it will just be like a real pain point that, blockchain can solve. Yeah,
we're a picks and shovels B2B business.
I think there's probably going to be other projects that, do well in Moon that, some famous film actor is going to, be the face of, but I don't know if they're necessarily actually going to solve a problem. They might just, make some money with an NFT. But yeah, I think the real things that are going to be solved are going to be the boring ones that actually a lot of money can be saved by using them. So I'd say something around supply chains is pretty big opportunity. In business school, I worked on a project with a friend around mortgage origination and around how blockchain technology can help make mortgage origination more efficient, cheaper, all sorts of things. But it is really hard to get mortgage companies to use, a new technology that's going to hurt their business model in a way. Right? They make money by being inefficient. So it's very tricky. It's very tricky to challenge incumbents, that basically have an interest in keeping things the way they are. So I think, I think it's going to happen. I just think that there needs to be more developers and more money being invested in those actual use cases. And that is probably the more exciting thing about crypto in the long term, is going beyond, like what DEX is going to be the least slippage and the most efficient, and really going into like, what sort of products and services can actually make a difference in people's lives, can give them things they couldn't have before, and can just make, companies more efficient. So yeah, that's the long-term vision, but we got a lot of work to do to get there.
So two things. Earlier in the episode, you talked about the fact that you were using gold as a hedging asset and switched to Bitcoin. But then you also talked about the fact that you're pretty bearish on crypto because of how correlated it's becoming to macro and because of raising interest rates. So do you now think that Bitcoin is not a risk off asset? Has your thesis on Bitcoin changed?
Oh yeah, that's a really good point. Yeah, I guess it has. I think,
So
it's
are
just
you
such a
rotating
weird
back to
environment,
gold?
right? Because no, I was about to say I'm not rotating back to gold. I'm not rotating back to gold because gold is just boring. I mean, even when it does well, it goes up like 4%. It's just not enough to be exciting. I mean,
You're
once you
not
go to
having fun
crypto,
if
it's
you're not
like
losing 30% of your portfolio in a week.
yeah, exactly. Yeah, I'd rather go down 30% than go up 4%. It's more movement, it's more fun. But yeah, I think that gold and Bitcoin have both performed. Gold has performed unusually bad in this environment, so maybe it will still take off. I'm definitely not going back to gold. Basically, my focus is, combination of long-term venture play and just holding cash. You know, holding cash, paying my bills, having the liquidity so that if I need it, it's there. Which obviously isn't great because cash is being eroded. But I'm basically putting one bucket, into very risky long-term venture bets, and then another very
You got to
safe. And
go
that's how I
all in
get
on
my proper
treasury
risk
bills,
allocation.
David.
So I guess I could. Yeah, cash is obviously not a good position either because of inflation. I just want the liquidity so that I have the ability to use it when I need it. But it is pretty interesting. My long-term thesis wasn't really just about being an inflation hedge. It was also about sort of institutional demand leading to price appreciation, which I think is still there. So I actually think Bitcoin is still a good buy. My bet is just that it's going to go lower before it goes higher, right? So that's like
Do
a
you think it
short to
goes
medium term
lower
bet.
than your
But I
first?
don't,
Would you say Bitcoin was 15K when you first joined crypto?
yeah, and I bought it at like 17. So yeah, I think it
Do you
could go
think you
lower
go
than that, but I
underwater,
just I
David? Do
just
you
think it's
think
going to go lower than. I think it could dance around there. Yeah, yeah. I think that's definitely in the realm of possibility. Like I think the next few months are not going to be pretty, right? And like we're not having a great day or 2 days right now, but I think this is like the next quarter or two. Rates are just going to continue to go up. Inflation numbers are going to continue to be bad. Okay, they came down a little bit, but they're still really high. And the Fed's going to have to sort of slow things down to keep inflation under control. So I think that's what's going to happen, and yeah, I think it's going to hurt everything. But when that sort of event happens, it actually it tends to hurt all assets, right? So I think just all assets are going to go
all right,
down,
let's
and
end this podcast on a more positive note. So we're getting
yeah,
too negative, too down. Quick fire. What are you
we
most
are.
excited about in crypto?
What am I most excited about in crypto? I'm most excited about the happy hour that Wintermute just hosted with the Thai. It happened last Thursday night, and 165 people came, and maybe even more. We had to stop the list at that number because the fire code just wouldn't allow for more. And it was a great event. So I'm excited for the next event that we co-host together.
More than happy to. And so, last question: what is your hottest take right now in crypto?
Sorry, you cut off, Josh. Say that one more time.
What is your hottest take right now in crypto? Final question.
Yeah, hottest take. Hmm. Yeah, I think that I guess besides my bearish news on the market for the next few quarters, um, hottest take is that crypto regulation in the US is actually going to be a lot better than people think.
I like it. I like it. And so to finish us off, where can listeners find you and learn more about Wintermute's offerings?
Yeah, absolutely. You can find me on Twitter, David Micley. You can find Wintermute on our website, wintermute.com. You can also just message me on Telegram, dmicley, DMICLEY. If you want to talk OTC, market making, venture, really anything, give me a shout. If you're a friend of Josh, you're a friend of me.
Amazing. Well, David, thank you so much. This was awesome. And I hope to do it again soon.
Thanks for having me, Josh. It was a pleasure.